taxpayer's total tax appears in the Other Taxes section of the Form 1040 on line 63. The taxpayer's total tax payments already made, including any refundable credits, appears in the Payments section of Form 1040, line 74. If payments made exceed the amount of tax liability, then the amount of the overpayment appears in the Refunds section of Form 1040 on line 75. Payment options for taxes that are owed are check or a money order submitted with Form 1040V payment voucher, electronic funds withdrawal, or credit card. Also, an electronic federal tax payment system or EFTPS. Taxpayers who can't pay the full amount owed may request one of these agreements. Pay in full within 60 or 120 days with no fee, or make monthly installment payments using Form 9465 Installment Agreement Request that includes a fee. Now let's move on to amended tax returns, and we'll talk about when not to amend a return. So when is an amended return not required? If you make math errors on your return. With today's computer programs, this is unlikely, but in the event that it does happen, the IRS will correct any math errors. An amended return is not required if the IRS notifies the taxpayer to provide any missing schedules or forms. An amended return is not required if it involves a tax return that is in pending or rejected status. This return cannot be amended. On the Form 1040X, the amended tax return form, first you would specify the year for which the form is being submitted. There are three columns on the 1040X. Column A, the original or IRS adjusted figures from the original tax return or a previous amendment. Column C, which are the correct entries. And column B is the net change between columns A and column C. At this time, an amended tax return cannot be electronically filed. It must be mailed to the IRS. You'll need to attach copies of any forms or schedules that are affected by the change to your original tax return, including any Forms W-2 that are received after the original filing. You should also attach Form W-2G and 1099 that support any changes made to the return if there was income tax withheld. If a refund is expected, taxpayers must file the amended return within 3 years from the due date of the original return. On the Form 1040X, if there are any refunds and balance due involved, if the amended return results in a refund to the taxpayer must wait until the original return is processed, or if electronically filed, wait until the return is accepted. A taxpayer can cash the original refund check, if there was any, while waiting for any additional refund. Interest will be paid for a refund on an amended return, and this interest will be taxable in the year that it's received. The normal processing time for an amended return, Form 1040X, is 8 to 12 weeks. If the amended return results in a balance due to the IRS, a taxpayer should file by the April due date and pay the amount due in full, if possible, or as much as possible, in order to minimize interest and penalties on the tax return. So in summary, taxpayers have several options to pay a balance due, including the submission of an installment agreement. To correct a previously accepted tax return, a taxpayer may file a 1040X amended return. If a refund is expected, taxpayers have 3 years from the due date of the original return to file an amended return. Now let's look at some review questions. Tax credit. If the amount of the child tax credit is greater than the amount of income tax owed, the taxpayer may be able to claim the additional child tax credit. Next, we'll move on to residential energy credits. This credit, calculated on Form 5695, it flows to line 53 on the 1040. There's a home energy tax credit, which was extended through December 31st, 2016. Again, energy credits are non-refundable, and it's a dollar-for-dollar drawdown on taxes owed on the return. Residential energy credits involve insulation, which is 10% of the cost, up to $500. This includes air sealing caulk, spray foam, house wrap, and weather stripping. For roofs, credit is 10% of the cost, up to $500 on metal roofs with appropriate coatings and asphalt roofs with cooling granules. For windows, the credit is 10% of the cost, up to $200, and the windows must be Energy Star qualified. The residential renewable energy tax credit was also renewed through December of 2016. This credit applies to geothermal heat pumps, small wind turbines, solar energy systems, and fuel cells. So what home energy sources qualify for the residential energy efficient property credit? Geothermal heat pumps, solar water heaters, solar panels, small wind turbines up to $4,000, and fuel cells up to $500 for each 0.5 kilowatt power capacity. There's also other credits found on Form 3800 or the General Business Credit Form. There are a number of separate credits that are specifically included by law in what is called the General Business Credit. In other words, the General Business Credit can be just one or more than one of the many available credits. Each separate credit is computed on a form for that particular credit. If you qualify for more than one of the credits that make up the General Business Credit, then you must file Form 3800 General Business Credit. If you claim only one credit, the Form 3800 is not required. The one credit is considered to be your General Business Credit. As with the other non-refundable credits, this credit is subject to a limitation based on the tax liability on the 1040. This is taken into account on the form that's used to compute the particular credit. Examples of some of the credits associated with Form 3800 are the Orphan Drug Credit, Form 8820, Biodiesel and Renewable Diesel Fuels, Form 8864, Distilled Spirits, Form 8906, and Mine Rescue Team Training, Form 8923. Also, Carbon Dioxide Sequestration, Form 8933. Some interesting credits found on this form. And also, the Qualified Plug-in Electric Drive Motor Vehicle Credit, Form 8936. Probably one of the more common credits you might see associated with this form. One of the general business credits that we need to take a look at is found on Form 8941. You may run into this somewhere in your tax preparation career. This is the credit for small employer health insurance premiums. For example, David Saverson owns a small business and pays $6,000 in insurance premiums for his 2 employees. Now, this credit comes as a result of the Affordable Care Act. So under the Affordable Care Act, David is entitled to a tax credit. This Form 8941 flows to the Form 3800. The Form 3800 flows to line 54 on the 1040. And again, this particular taxpayer gets a credit for paying health insurance premiums as a small business employer. In summary, there are a few more non-refundable credits on the Form 1040. These include Retirement Savings Contribution Credit, sometimes called the Savers Credit. This is a federal tax credit designed to encourage low and modest income individuals to save for retirement. This credit is claimed on Form 8880. The Child Tax Credit. For children under age 17 at the end of the tax year, a taxpayer can claim a $1,000 tax credit per child. The Residential Energy Credits. Taxpayers who upgrade their homes to improve energy efficiency or make use of renewable energy may be eligible for tax credits to offset some of the costs. We claim this credit by filing Form 5695 with the tax return. Form 3800 covers a series of general business credits. The general business credit is made up of a number of separate credits specifically included by law and can be just one or more than one of the many available credits. Each separate credit is computed on a form for that particular credit. Next, let's look at some review questions. For the same student in the same tax year. What types of expenses qualify for these education credits? Expenses that qualify are tuition and fees that are required for enrollment or attendance at any accredited college, vocational school, or other post-secondary educational institution that's eligible to participate in the student aid programs administered by the Department of Education. A searchable database of all accredited schools is available at the following web address. What types of expenses don't qualify for the education credits? Well, qualified expenses do not include room and board, oddly enough, student activities, transportation, or other similar personal, living, or family expenses. Can I claim an education credit if I'm married but file separately? No. Neither the American Opportunity Credit nor the Lifetime Learning Credit can be claimed if the individual is married but filing a separate return. If the amount of qualified tuition and fees that I pay is greater than the amount of a scholarship, should I fill out the Form 8863? Absolutely, but you must reduce the qualified expenses by the amount of any tax-free educational assistance. Do not reduce the qualified expenses by amount paid with the student's earnings, loans, gifts, inheritances, and personal savings. If tuition was paid by a government-subsidized loan, can I still take the American Opportunity or the Lifetime Learning Credit? If you take out a loan to pay higher education expenses, then those expenses may qualify for the credit if you will be required to pay back the loan. The credit is claimed in the year in which the expenses are paid, not in the year in which the loan is repaid. Let's look at a comparison chart of these education credits. On the left side, we have the American Opportunity Credit. On the right, the Lifetime Learning Credit. The American Opportunity Credit, we get a max of $2,500 credit per student, 100% of the first $2,000, 25% of the remaining expenses. The Lifetime Learning Credit, we get a max of $2,000 credit per return. The American Opportunity side, the income limit is $180,000 if married, $90,000 if single, head of household, or qualifying widow or widower. The income limit on the Lifetime Learning Credit, $128,000 if married, $64,000 if single, head of household, or qualifying widow or widower. 40% of the American Opportunity Credit may be refundable. The Lifetime Learning Credit is a non-refundable credit. It's limited to calculated tax on the return. The American Opportunity Credit is available for the first 4 years of college only. The Lifetime Learning Credit is available for all years of college and for job improvement courses. The student must be pursuing a degree to qualify for the American Opportunity Credit. Degree pursuit is not necessary for the Lifetime Learning Credit. The student must be enrolled at least half-time for the American Opportunity Credit. The Lifetime Learning Credit is available for one or more courses. The American Opportunity Credit, to qualify, you can have no felony drug convictions. Felony drug convictions will be permitted to qualify for the Lifetime Learning Credit. In summary, 2 education credits may reduce a taxpayer's tax liability: the American Opportunity Credit, the Lifetime Learning Credit. The American Opportunity Tax Credit is worth up to $2,500 on the first $4,000 of qualifying educational expenses, which include course materials as well as tuition. If the student or the parents are married filing separate, then the American Opportunity Credit and the Lifetime Learning Credit cannot be taken. Taxpayers cannot receive multiple benefits for the same student's expenses. Now let's take on some review questions.